Preparing for a tax associate at Wells Fargo interview? You've reached Candy Mentor, and this video is for you. We'll walk through 20 key questions you're likely to face. For each question, you'll see a sample answer followed by the key points to cover. Subscribe, like, and share, and drop a topic request in the comments. Question 1. Walk me through your tax experience and how it prepares you for a tax associate role at Wells Fargo. My tax experience has focused on accuracy, documentation, and meeting filing deadlines. I have worked on return preparation support, book tax adjustments, account reconciliations, and basic tax research. What prepares me for Wells Fargo is my comfort working with large data sets, following review controls, and explaining issues clearly. In a banking environment, small tax errors can create regulatory and financial risk, so I approach the role with discipline, curiosity, and strong attention to detail. While answering, focus on relevant compliance provision research, reconciliation, and documentation experience. Connect your skills to banking, deadlines, controls, accuracy, teamwork, and Wells Fargo's regulated operating environment. Question 2. What is the difference between book income and taxable income? Book income is income reported under generally accepted accounting principles, while taxable income is calculated under tax law. The two differ because accounting standards and tax rules recognize revenue and expenses differently. For example, accelerated tax depreciation creates a temporary difference, while non-deductible penalties create a permanent difference. I would reconcile book income to taxable income carefully because that bridge supports both the corporate tax return and the ASC 740 tax provision. Make sure to cover financial reporting versus tax rules, permanent differences, temporary differences, examples like meals, depreciation, accruals, and why the reconciliation matters for tax provision and returns. Question 3. Can you explain the basic steps in preparing an income tax provision under ASC 740? An income tax provision estimates the tax impact of current operations for financial reporting. I would start with pre-tax book income, adjust for permanent and temporary differences, calculate current tax payable, and then update deferred tax assets and liabilities. I would also consider valuation allowances and uncertain tax positions. The final provision includes current and deferred tax expense, and the effective tax rate reconciliation helps explain why tax expense differs from the statutory rate. In your answer, talk about pre-tax book income, permanent and temporary differences, current tax expense, deferred tax expense, effective tax rate, valuation allowance, uncertain tax positions, and review documentation. Question 4. What are deferred tax assets and deferred tax liabilities? Deferred taxes arise when book and tax treatment differ in timing, not permanently. A deferred tax asset represents a future tax benefit, such as net operating losses or expenses accrued for books but deductible later. A deferred tax liability represents future taxable income, often from accelerated tax depreciation. I would evaluate whether deferred tax assets are realizable based on future taxable income, tax planning strategies, and evidence supporting or challenging a valuation allowance. Be sure to mention temporary differences, future deductible amounts, future taxable amounts, common examples, balance sheet presentation, and how realization concerns may require a valuation allowance. Question 5. What tax issues are especially relevant for a large bank like Wells Fargo? For a large bank, tax is not just annual compliance. It connects to products, controls, and regulatory trust. Key issues include federal and state corporate tax, apportionment across jurisdictions, tax treatment of financial instruments, withholding and information reporting, and tax credits. Wells Fargo also operates under high regulatory scrutiny, so documentation and controls matter. I would approach tax work knowing that accuracy supports financial reporting, compliance, and the firm's reputation. While answering, focus on corporate income tax, state apportionment, financial products, tax credits, withholding, information reporting, regulatory scrutiny, internal controls, audit readiness, and reputational risk in banking. Question 6. How would you approach preparing or supporting a federal corporate income tax return? I would begin by understanding the prior year return, work papers, and trial balance mapping. Then I would gather current year data, prepare supporting schedules, and identify book tax adjustments for items like depreciation, compensation, reserves, and state taxes. I would reconcile totals back to source reports and document assumptions clearly. Before review, I would perform reasonableness checks against prior years and explain major variances so the reviewer can focus on judgment areas. Make sure to cover gathering trial balance data, mapping accounts, preparing book tax adjustments, supporting schedules, reviewing prior year work papers, documenting assumptions, resolving variances, and coordinating with reviewers. Question 7. How does state income tax apportionment work, and why can it be complex for Wells Fargo? State apportionment determines how much income is taxable in each state. Many states use a receipts or sales factor, but sourcing rules vary significantly. For a bank like Wells Fargo, complexity comes from customers, loans, card activity, investment income, and services across many jurisdictions. I would focus on understanding the applicable state rules, using reliable data, documenting sourcing positions, and checking consistency with prior filings unless there is a clear law change. In your answer, talk about allocating income among states, sales or receipts factors, sourcing rules, nexus, banking-specific revenue streams, state law differences, and documentation supporting filings. Question 8. What is an uncertain tax position, and how would you evaluate one? An uncertain tax position is a tax treatment that may be challenged by a taxing authority. Under ASC 740, I would first assess whether the position meets the more likely than not recognition threshold based on technical merits. If it qualifies, I would measure the largest benefit with greater than 50% likelihood of being sustained. I would document the law, facts, analysis, and potential exposure, then escalate judgmental positions for senior review. Be sure to mention ASC 740 recognition and measurement, more likely than not threshold, technical merits, tax authority examination risk, documentation, interest and penalties, and escalation to senior tax professionals. Question 9. Describe your process for researching a tax question you have not seen before. I start by defining the exact tax question and gathering the relevant facts. Then I identify the jurisdiction, tax type, and governing authority. I prefer primary sources first, such as the Internal Revenue Code, regulations, IRS guidance, or state statutes. Then I use secondary sources to confirm interpretation. I summarize the conclusion, risks, and assumptions in a concise memo. If facts are incomplete, I flag them rather than forcing an unsupported answer. While answering, focus on defining facts, identifying jurisdiction and issue, using primary sources, checking guidance hierarchy, documenting conclusions, considering contrary authority, and asking clarifying questions when needed. Question 10. How would you reconcile a tax general ledger account with a return or provision work paper? I would start with the general ledger balance and compare it to the supporting tax work paper. Then I would trace activities such as payments, accruals, provision entries, true-ups, and reclassifications to source documents. Any variance should be explained, corrected, or escalated. I would also look for old reconciling items that need resolution. A strong reconciliation should be easy for another person to follow without relying on verbal explanation. Make sure to cover starting balance, current activity, payments, accruals, true-ups, journal entries, source documents, unexplained variances, aging items, and preparing a clean audit trail. Question 11. Tell me about a time you managed competing deadlines during a tax close or filing period. During a filing period, I had to support multiple work papers while also responding to reviewer comments. I created a deadline tracker, separated urgent items from items that depended on other teams, and communicated status daily. When I saw one schedule might be delayed, I escalated early and asked for the missing data. We filed on time, and the reviewer had fewer follow-up questions because the work papers were organized and clearly tied to support. In your answer, use a STAR structure. Highlight prioritization, communication, calendar management, quality control, escalation, teamwork, and how you avoided sacrificing accuracy under pressure. Question 12. How would you handle an IRS or state tax notice received by the company? I would first log the notice, confirm the response deadline, and identify the tax period, entity, and issue. Then I would compare the notice to the filed return, payment records, and supporting work papers. If the notice is correct, I would help prepare the adjustment or payment process. If it appears incorrect, I would draft a fact-based response with documentation. For material or sensitive issues, I would escalate promptly to management and tax counsel. Be sure to mention logging the notice, checking deadlines, understanding the issue, matching it to filed returns and payments, gathering support, drafting a response, and escalating sensitive matters. Question 13. Why are internal controls important in a corporate tax department? Internal controls make tax work reliable, reviewable, and defensible. In a large financial institution, tax numbers flow into financial statements, regulatory reporting, and cash payments. Controls help ensure data is complete, calculations are reviewed, judgments are approved, and changes are documented. I would follow checklists, maintain evidence of review, and respect segregation of duties. Good controls are not bureaucracy. They reduce risk and help the tax team operate consistently under deadlines. While answering, focus on preventing errors, supporting financial reporting, regulatory expectations, segregation of duties, review evidence, approval workflows, data integrity, repeatable processes, and audit readiness. Question 14. What Excel or data skills would you use in a tax associate role? Tax work often starts with messy data, so Excel skills are practical risk controls. I would use pivot tables to summarize activity, SUMIFs for workpaper schedules, XLOOKUP or index match for mapping, and variance analysis to identify unusual movements. I also pay attention to formula consistency, source tie-outs, and clear formatting. If a reviewer cannot follow the file quickly, the analysis is not finished, even if the math is technically correct. Make sure to cover pivot tables, XLOOKUP or index match, SUMIFs, data validation, reconciliations, variance analysis, formatting for review, large datasets, and protecting formula integrity. Question 15. What do you know about withholding tax and information reporting in a banking environment? Withholding and information reporting ensure the right tax information is reported to customers, counterparties, and tax authorities. In banking, this can include Forms 1099, 1042-S, backup withholding, and documentation for U.S. or foreign payees. The risk is high because errors can affect many accounts and create penalties or customer impact. I would focus on accurate data, valid tax forms, system controls, exception reporting, and timely correction of issues. In your answer, talk about payments to customers or vendors, Forms 1099, 1042-S, backup withholding, FATCA concepts, payee documentation, penalties, and the importance of accurate reporting systems. Question 16. How do depreciation differences create book tax adjustments? Depreciation is a common timing difference because generally accepted accounting principles and tax rules often use different methods and lives. A company may depreciate an asset straight line for books, but use MACRs or bonus depreciation for tax. That usually lowers taxable income earlier and reverses later. I would reconcile book fixed asset data to the tax depreciation schedule, confirm additions and disposals, and ensure the temporary difference flows correctly into deferred tax calculations. Be sure to mention generally accepted accounting principles depreciation versus tax depreciation, useful lives, bonus depreciation, MACRS, temporary differences, deferred taxes, fixed asset systems, and reconciliation between tax and book basis. Question 17. How would you think about net operating losses and tax credits in a provision or compliance process? Net operating losses and tax credits can reduce future cash taxes, but they must be tracked carefully. I would maintain schedules showing origin year, usage, remaining balance, expiration, and any limitations. In the provision, I would consider whether future taxable income supports realization of those benefits. In compliance, I would ensure the return uses the correct carry-forward amounts and ordering rules. Strong tracking prevents both lost benefits and unsupported tax positions. While answering, focus on carry-forwards, carrybacks if applicable, limitations, expiration dates, valuation allowance assessment, supporting schedules, credit ordering, and coordination between return and provision workpapers. Question 18. Tell me about a time you found an error in your work or someone else's work. What did you do? I once found that a formula range in a reconciliation excluded the last month of activity. I immediately quantified the impact, checked whether any related schedules used the same template, and informed the reviewer before submission. The amount was not material, but the control lesson mattered. I corrected the file, added a total check line, and saved a clean version history. I learned to verify formulas, not just rely on prior period templates. Make sure to use STAR format. Emphasize ownership, transparency, root cause analysis, timely escalation, correction, documentation, process improvement, and ethical judgment rather than blaming others. Question 19. Describe a time you worked with a difficult stakeholder or cross-functional team. I worked with a finance contact who was slow to provide data because tax requests were not their main priority. Instead of just repeating the request, I explained why the data was needed, the filing deadline, and the specific fields required. I also offered a template to make the response easier. The turnaround improved, and we built a better process for the next cycle. I tried to reduce friction while still protecting deadlines. In your answer, highlight communication, patience, fact-gathering, deadlines, empathy, escalation when appropriate, and the ability to translate tax requirements for finance, operations, or technology partners. Question 20. Why do you want to work as a tax associate at Wells Fargo? I am interested in Wells Fargo because the tax function sits inside a complex, highly regulated financial institution where accuracy and judgment matter. As a tax associate, I would gain exposure to corporate tax compliance, provision work, state issues, controls, and cross-functional projects. I like roles where technical detail connects to business risk. Wells Fargo's scale would challenge me to keep learning while contributing to reliable reporting and responsible compliance. Be sure to connect your motivation to tax technical growth, large bank complexity, controls, compliance, teamwork, career development, Wells Fargo's scale, and contributing responsibly in a highly regulated financial institution. If you are still with us, congratulations. You are much ahead of the rest and serious about preparing for your interview. We hope we were able to add value to your preparation and create some helpful content. Do not forget to like and share this video. Our small act can do great things for us.